What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that. And in this video, we will talk about how the buyers have a super key test right now, go over some of the old trade zones, hit you with some new trade zones, cover some hype sectors, and that is pretty much it. So let's get into it. All right, so like we were talking about, pretty much always, and last week, it's really always about whether or not breakouts can be affirmed, right? So just like on this big old gap after the election, the breakout was affirmed with the low of the day pretty much a drop and pop at the prior all-time high, 586.12. So going forward, we were continuing to evaluate the success of these buyers by seeing whether or not they can hold over 586.12. And even if the sellers can get back under 586.12, technically this prior all-time high structure from October 9th to 30th is still being affirmed as demand, as long as the point of control of the structure at 582.45 is supported, which currently is still the case. Now, there are, definitely some red flags, right? Because the three primary sectors that we care about, they make up like 40+% of the S&P 500 is the Qs and the XLV and the XLF. So we don't normally cover those sectors here, but let me just make this point real quick. So XLV is now back under this local area of demand, but bigger picture, it is still holding over this much larger block of demand. So, in the near term, we just want to see, can these buyers continue to hold over all of this demand with some, price action like this, which would be okay, bigger picture. And additionally, we look at XLF, and it's still near the highs. So, it becomes a question of whether or not XLF is going to join XLV and whether or not QQQ can remain durable because it's also at its key test. But let's just finish covering SPY for now. And so the idea right now is that buyers still have space to set a daily higher low over 567.89. And as of right now, they're still in fine standing defensively as long as they can hold over 586.12. The best case scenario now heading into next week would be for the sellers to fail a gap fill. This is a huge gap, right? And so this should be relatively easy work. I know that there's this prior supply acting as demand over here in the way, but this is, one-way trade here. So the sellers should have easy work trying to fill this gap. And if they can't fill the gap, well, then obviously that would be indicative of the sellers not being very strong. So that being said, even if the buyers do defend this area again and hold over 586.12, there is now space for a lower high to be set under 600.17. And you can see how the point of control of this like 5-day balance or so is at 598.14. So we could be looking at a situation where we're just going to balance up here, which is pretty much the best case scenario for these buyers, because again, this trend is fine as long as you're creating areas of demand, breaking out, holding over back test of the area, the local area of demand, and then advancing. So if we're going to look for, if this is going to happen going forward, then this trend is still fine. Let's see. The trade zone that we had set up was as such, just looking for a backtest play. It's pretty much the same exact play as we did over here. And then obviously that one worked out fine. Will this one work out fine? I have no idea. You never know, right? You just can put your risk down and then see what the market will give you, because that's trading, that's the edge, right? It's no different than any other business, right? So like if you are a I don't know, car salesman, what do you do, right? You buy cars and then you try to sell them, right? You don't have any real control over whether or not these cars are going to move off of your lot, right? You can only decide, okay, I'm willing to buy this inventory at this price and then go from there. So that's pretty much it for the SPY. To fill this gap, in my opinion, would be a bit of a red flag. So ideally for these buyers, you get an incomplete fill. So we shall see. That's pretty much it for the SPY. So moving on to the Qs here. So the Qs also, I believe, in the trade zone that we set up. And again, this is just looking to backtest this prior area of demand. I always suggest using these trade zones with hourly extension, of course, and we would just be looking to revisit these highs. And honestly, at this point now, you probably want to reduce your targeting to, like under here, right? So you still have 2R on that trade. And the idea is that, again, this is like 5 days of supply here. And so if these buyers do hold over this area of demand and get some bounce going, the first place where they should likely have problems is over here, right? Is over here under this guy at 509.83. So Very similar to SPY, right? They wanted the buyer, best case scenario would have been to hold over the breakout 0.503.52. Obviously, they did not get that done. There is space for a lower high to be set under the all-time high resistance 515.58. And this prior all-time high structure is being affirmed as demand as long as you're holding over 496.29. So heading into next week, and I would be surprised, honestly, like if the sellers didn't continue to fill the gap down here. So the question then becomes, all right, well, if these QQQ sellers do continue to fill the gap, will they advance right into this session, come test the lows of this range? That's really what we care about right now. Friday's session was a notable miss of the value area low of the key prior all-time high structure. So if these buyers are to get going right away next week and find acceptance over 496.29, that's pretty much the best case scenario for these buyers going forward. That would mean that the sellers would have failed to fill this gap. They would continue, the buyers would be continuing to affirm this structure as demand, and then we would just be looking for some sideways trade over this demand zone. Again, as long as you're building areas of demand, holding back test of them, the trend is fine. Just like over here, you create an area of supply, breakdown supply, breakdown supply. This trend was fine until boom, you break over this area of supply, right? And then the buyers tried to affirm it as demand. And then they got back to business here, creating areas of demand, breakout, backtest, breakout, backtest. So now it's just a matter of can they hold over a backtest of demand. And the Fed also came out, or at least Chairman Powell came out saying that the Fed is not really in a rush to cut rates, which the market should perceive as bearish, right? Because, you know, as of right now, the market continues to be focused on rate cuts and jobs, right? So rate cuts are dependent on the labor market. The Fed has signaled very clearly that they're willing to cut rates as long as the labor market remains strong. So the fact that Jay Powell is coming out and saying that they're not in a rush to cut rates would suggest that they may be seeing some cracks, so to speak, in the labor market. So I would not be surprised if the market now starts being ultra sensitive, even more sensitive than before to, you know, jobless claims and whatnot. So anyway, that's pretty much it for the Qs. Moving on to the rut here. So the rut, this was our old trade zone, and let's see here, do we establish a new one? So we did create a new one here, and again, it's no secret by now, you know, this is simply how I take pretty much most trade, although next year I am interested in expanding the trades that I take and working on adding 2 trades with momentum instead of you know, looking for backtest plays. But whatever, that's neither here or there. If you are interested in, you know, doing that with me, then, you know, check out our community. This year was really, I was primarily focused on looking for backtest plays and building a large IWM position just based off the thesis that we were talking about earlier regarding rate cuts and a strong economy should benefit the small caps. And, you know, that went very well. And so I want to continue to implement this kind of a thing, but I also want to round out my approach. So anyway, anyway, if you're interested in you know, trading alongside a bunch of traders, many of whom are professional, full-time traders, check out our community, links in the description below. I talk through all of these IWM or RTY operations throughout the year for the last like 2 or 3 quarters now. So, you know, if you're interested in seeing that kind of a thing, then, you know, give our community a shot. So anyway, hourly oversold conditions into a backtest of all of this local demand, I think is very reasonable. Just like this play, you know, this play back here that we shared, which obviously shook out quite well, was really just looking to backtest this area and the backtest the point of control of this big structure over here. So as of right now, the IWM is continuing to struggle to make new highs, but if they can hold over 228.63, then this breakout continues to be affirmed. And even if we do come back down into this structure, if they can hold over 217.38, that's the point of control of this structure from back in 2021, bigger picture, this is okay, right? So you want to hold over 217.38, see some kind of balance like this. Ideally, don't come down to 217.38 again, because this is a pretty notable breakout above it. But just trading sideways like this will keep these buyers positioned really well for a go at this all-time high structure, which is the only structure in the way before new record highs. So space for a daily higher low, anything over, let's see, 217.63 would be good for one. And I still continue to maintain that this is a very reasonable trade zone. Wait for these hourly oversold conditions, which we have right now, and before taking any kind of trade within this structure. And that's pretty much it. Moving on then to the Dow. Let's see. So the Dow, here is our old trade zone. It doesn't look like we created a new one. And oh, I remember now. Because there's not a lot of value established here, right? Like if you're a very aggressive operator, then taking this trade zone and applying it over here, like just using the same exact idea and applying it to this structure is reasonable. But for me, it's not a high enough probability setup, right? Because there's just not a lot of value that was created above all of this from down here. So personally, I would just still continue to use this old one. So if you did use this trade zone, you should have scaled out the majority of your position by now. Your stop can be under this low. You can look to reload that if things get extended again down here, which they would be on the hourly time frame if they were to start drilling from here. So that is that's really it. The best case scenario for these buyers is to hold over this guy over here. That's the all-time high, or the prior all-time high. Oops, the prior all-time high resistance at 433.20. So the Dow is honestly showing you a lot of relative strength right now, right? Because it's the only one who has not touched down on the prior breakout point, right? So the SPY has touched down on this prior breakout point. The Qs has touched down and traded below it, which is showing some relative weakness, which is not ideal. Typically you want Qs to lead the way. And even the IWM also has come back down to backtest the breakout point. Whereas the Dow, as of right now, pretty much holding a double bottom with the low of the gap up from November 6th session. So the best case scenario now would be for these buyers for these sellers to fail touching down on 433.20 and then set a daily higher low here at 433.52, which the buyers need to break over 436.51 next week in order to have confidence in this higher low being set here. And just like the Qs, just like the SPY, just like the IWM, there is space for a daily lower high to be set under 444.87. So that's really it. I wouldn't make any changes to this. I would just continue to look for plays down here and essentially just looking for the potential for us to balance like this, which would be healthy as long as we're holding over this big old volume spike over here. Healthy, bigger picture, I should say. All right, moving on to the dollar. So the dollar has now surpassed our primary, secondary, and tertiary targets. At this point now, it depends on what kind of an operator you are, right? Like if you are really trying to swing for the fences here, which I mean, obviously, if you use this trade zone and you trade the dollar futures, you've already crushed it, right? This is a monster trade. So if you still have some position now, you have a lot of flexibility, right? You can leave your stop under this the lows of this local demand zone at 103.245, or if you really want to risk it for the biscuit, because who cares, right? You've already gotten a huge chop here. I mean, rather a decent chop here, a better chop here, and a huge chop here. I don't really see much reason to walk this stop up to 103.245. Like, if you want to be very protective of your gains, sure, like this is a very logical place to walk your stop up. That's what I would normally do. But if you've already smashed this trade, and you're down to a runner size, I think leaving it down here is fine, right? Because at this point now, if the sellers were to do this, right, if the sellers were to drill all the way back down to here, but then still hold over this local demand zone, and then somehow make their way back over this guy, this 2022 structure, that's really the best case scenario. So the best case scenario for these buyers now is to continue to find acceptance over 106.335. That's the point of control of this supply, which has been problematic for these dollar buyers since 2022. And as of right now, they're holding a backtest of the point of control. You can see how the low of the day for these two sessions was pretty much made right off of the POC that we're looking at, 106.335. Can these buyers continue to hold over it? I would be surprised if they would just continue to hold over this point of control, but you never know, right? Crazier things have happened. So if these sellers, however, do press the issue next week and crack back down under 106.335, then again, we care about this local demand zone, right? As long as these buyers can hold over this local demand zone, then this trend is doing just fine. So if we look for something like this, come back down here, trade sideways, this is all very healthy. And then if they consolidate like here over this guy for some time and then find acceptance back over 106.335, that's the best case scenario for these dollar buyers. Okay. So that is pretty much it. I wonder if that has anything to do with the BRICS initiative kind of stalling, the dollar strength, I mean. Anyways, so that is pretty much it. Space for a daily higher low. Anything over 103.285 is going to be good for one. And if you have no position in the dollar right now, and you're looking at to try to grab some position, I don't love this trade zone as much, right? I much rather prefer this trade zone because it was very clearly based off of the area of change, right? As long as these sellers weren't finding acceptance under this key demand zone, which is what held price over here and here and here and here and here, well, then obviously there were no issues for these buyers, right? So I don't love this trade zone as much because it's in the middle of this much larger range, but it would be reasonable to be looking for a trade within here, looking for essentially for this local area of demand to hold. Something like that would be very reasonable for the dollar heading into next week. Moving on to NVDA. So NVDA earnings is right around the corner. So I would, I would probably just wait until after earnings to do anything in NVDA. The initial pop that didn't really see that much follow through is a bit of a red flag, but technically they are still holding over 140.76, which is this prior all-time high. And again, bigger picture, as long as you're holding over this big guy, all this consolidation is fine, right? This is a big old area, a big old area of demand. And then this is a whole lot of balance here, which is constructive as long as they're holding over this area of balance here. So the best case scenario would be to hold over this structure, which has been what the buyers got done over here. But, earnings is always a gamble. So I don't hate it still. Like, I still think this is a very reasonable area to be taking trade. But I would prefer if we had like, a setup where we were even higher, such that if we were to come back down in here, you'd be really beaten up, like even on the daily, which I don't think would be the case right now. You would not really be daily oversold yet into this area. 128.53. Actually, it might be flirting with this. So if you can get daily oversold into this area, I think that would be ideal, even if it's off the earnings reaction, because the last time that the NVDA was daily oversold was, man, way back when. It hasn't been daily oversold since, you barely missed it there. So really it's been back since 2022. So essentially a big old back burner trade for a daily oversold. And again, if we were to come into this area where this key structure is, which really it's this guy, right? The lows of this prior all-time high structure. I think that would be very reasonable trade. So I'm going to stick with this. I think this is very reasonable. Obviously earnings is, a bit of a question mark here. But I think from a technical perspective, if daily oversold into here, I think that'd be fine. Okay, bigger picture on the weekly time frame. You can't love that, right? This weekly higher low, higher high, not really seeing that much follow through. But then again, on the monthly time frame, you are just looking for a higher low over 90.69. So we shall see. All right, so moving on to Bitcoin. So Bitcoin obviously doing just fine here. At this point now, the sellers are not really comfortable, right? Because obviously you're in blue sky breakout and there's a lot of space for these buyers to defend against a back test of the prior all-time high now, which is at, let me kill some of these lines here. 73835.57 is the prior all-time high. So we can just kill that now. Move this over here. All right. That's actually not right. So as long as these buyers can hold over 73835.57, then they are doing just fine. This breakout is being affirmed. It's pretty much the same level as this local high over here, 73624.98. So basically, as long as this local area of demand is being affirmed, then bigger picture, these buyers are doing just fine. So at this point now, then if you're a seller, if you're a buyer, excuse me, you want to be looking for something like this, right? Like ideally you come back down, test this high volume area, don't see much follow through, and then continue on balancing over this much larger area of sideways, right? Just like all of this balance was pretty much just holding over this, right? It was actually a near miss, I think. Oh, actually it came right back down to it. Wow, to the tick. So just like this low of this sideways range was made right off of this prior high, it's the same now here, right? I mean, again, like this is just a tale as old as time. This is simply how the markets have to work. Just like over here, this low, pretty much just a back test of this area sideways here. Even this low, right? These lows in this structure pretty much is a backtest of this smaller area of demand. So it really need not be harder than that. I assure you, there are harder parts of trading than the technical sequencing, in my opinion, especially if you do it in this manner. So it's really just like that, right? That's it. We're going to look for a trade like this. All right, can they hold over these structures here? If so, then we're probably looking at further balance. Something like this is totally reasonable. Let me just check the projections. they're probably going for R4, right? So we should be trying to play for here as long as we're holding over all of this local demand. All right, so something along these lines, I think very reasonable. There's good R on that. And that's really it for Bitcoin. Okay, tons of space for a daily high or low. Anything over 66783.77 will be good for one. On the weekly time frame, also lots of space for a higher low. I don't care about this rinky dink one. I would say anything over 58863.90 good for a weekly higher. All right. What? We've been doing Ethereum? Oh, right, we do Ethereum. Okay, so for Ethereum, all right, so finally Ethereum has broken out of this very large sideways pattern. There's a good amount of space for these buyers to work with to defend this area acting as demand now. I continue to maintain that this is a very reasonable area for backtest plays. And basically, you're just looking for this structure as this area of demand to hold price. And if this area of demand holds price, then we should expect price action like this, right? So if we hold a backtest of this area, the first place these buyers should try to get to is the point of control of this essentially gateway structure. And if they can overcome or maintain over the point of control of this gateway structure at 3083.33, then these buyers should be trying to come here, the value area low of the of this fella, right? So this fella over here, which is what made these highs over here, it's pretty much the last structure before the all-time high structure, right? Technically, there's like 3 of these guys sitting on top of here, and you could view it as just one large person or one large structure, but I'm just kind of viewing them as separate ones because they're kind of clear. If you wanted to perceive it all as one, that would be fine, and I bet you that it would tell you a very similar story, but these reactions were pretty good, and so I've just been using it as such. And because that lower structure made for the highs of this supply, I've just been sticking with that guy. So that is really it. No change for these trade zones. For the Ethereum, I would just look for this location still and just want some extension into this location. And I'm actually pretty interested in trying to grab some Ethereum for a potential laggard play. Although, let me see this here. The ratio chart. Ratio chart's still drilling. But it is testing all of this sideways here. So, yeah, I'm pretty interested in this. But then again, you look at Sol, and I think Sol looks even better. And it has that, like, Ethereum competitor narrative. I don't know. I mean, I've got my hands full right now with runners from swing trades and also managing the IWM, so we shall see. Okay, so that's pretty much it for Ethereum. No change on these trade zones. I still think extension into here is very reasonable. And then finally for CCJ, there's been a lot of good news for uranium in general, and the chart doesn't really seem to be responding to that very much. So at this point now, if you initiated from this trade zone, like we were talking about, very reasonable to be looking for partial exits no later than 56. 56 is the high of this prior all-time high structure over here. And that prior all-time high structure is being affirmed as demand as long as you can find acceptance over the point of control of it at 50.22, which is why our trade zone was set up as such. And so this is probably already like a 2R trade right here, just about 2R. So at this point, if you did use that trade zone, I do recommend you chop it up at that 56 level. Hopefully the market gives you another opportunity to do so if you haven't already done so. I believe we've talked about it already in prior episodes, installments. So hopefully you've done that. And at this point, then you can just walk your stop under this low here. And then if you do happen to stop out, you've still booked a pretty decent trade here, especially from an R perspective. Now, I'm still open to this being one very, very large area of sideways. So, me personally, I would still prefer if we could drill down and like lose like 40% of its value and come all the way back down here, because I would be much more comfortable taking trades off of this very large structure here, all of this sideways trade, which has not really been back tested yet. So that's what I'm looking to get done. I think this still is a very reasonable trade zone in the short term if you're a more aggressive, more momentum style trader. But I'm just going to stick to being patient on CCJ. I also have some other ideas out for like URN, M, and URA. So not really looking to rush into anything for CCJ, but yeah, this is still a very reasonable area to be taking trade. So anyway, that is pretty much it. Yeah, that's pretty much it. I don't really have any show and tell But for, really quickly, I guess we could just go over the RTY trade. So again, like I was saying before, I spent a good chunk of this year, pretty much like 2 quarters, creating a IWM position, establishing IWM position by day trading RTY. And again, all of that is documented in our trade room. So if you're interested in trading alongside the Chart Guys team, then links in the description below. Check us out. But what I ended up doing to protect that position was I hit a sell, and it took me 2 days to get it done. But I can just walk you through it really quickly. I thought I had it queued up, but I actually don't. So hang on a second here. So the first attempt was on Tuesday. Here, and let's see. Was on Tuesday here. So this is the kind of thing we get done, in our trade room every single day. And so, I hit you with a video rundown, give you these key levels every single morning. And then if I do happen to take some trade, I will talk about it like right away. So I'm saying, okay, listen, I'm primarily interested in protecting the IWM position. Again, with the RTY sell, ideally with 5-minute extension into the value area low. And so again, I'm letting you know what my plan is. This is a little bit late into the session or whatnot. And then let's see, here we go. At 9:44, I sold the RTY off of the point of control. I take the risk out. Again, these are just giving you the live updates for what we were doing. Chopped it up, stopped the rest, and then let's see, a little bit later in the session, I hit it again over here. So uno más, so I hit that sell again at 9:52, and at 9:52 for the rut on Tuesday, we are over here. 9:52 for the rut on Tuesday. 9:52 is over here, right? So 52 is over here. So I said I'm a little bit late to the party. I was responding to some messages because I wasn't in the office on Monday. So 52 is here, and then we take another chop here. All right, so let's see, chopped it at like 54 at the point of control, and then we're looking out. I took out more at the developing value area low, which is right here. And then I'm saying, okay, at this point now, I'm looking for a test of the daily level, 239.19 on the IWM chart, because again, if we're hitting a sell here, roughly here at the value area high of the structure, we should be aiming to get to at least the point of control. So get that exit out, and then I look to walk the stop for the rest, and I get stopped down in the overnight session. Full disclosure, it is what it is. I walked my stop down on this session to, let's see, so this is Tuesday. I walked it down to over this high, because if this trend was going to continue, then the best case scenario for these sellers would be to hold this area of supply and then break down and then continue on. So that does not happen. I stop out my last runner, but I recognize that at this point in time, on Wednesday's session, all that's really happening on the high of this moment is a back test of this point of control and a test of this Monday session. So I just hit that same exact trade again, pretty much, not the same exact trade, but very similar trade on Wednesday. So again, like I said, every single morning, I'm going to hit you with that, whatchamacallit, I'm going to hit you with the video rundown, go over my thought process on like what we also have a lot of fun in the thread, a lot of silliness in the thread, usually, pretty much always. Yeah, so hit you with that video rundown, and that's whatever my plan is. And let's see, blah 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 blah. Let's see, somewhere here, blah 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 blah. We're just messing around here. Okay, I honestly thought it was earlier in the session, but hang on a second. Hang on, I think I've already done that trade then, right? No, something is wrong here. So I must have remembered it wrong. I must have got stopped out the next day. Where's the other trade here? Huh. What day is this? I think I may have clicked into the wrong day here. Should be on Wednesday. Yeah, I clicked into the wrong day. Apologies. So on Wednesday then, looking for responsive trade again, and I sold the pass under the open at 9:35, took a chop, stopped out the rest, and then waited again, sold the SS, the stair step setup at 9:45, and that's on Wednesday. So at 9:45 on Wednesday, we are here on the Wednesday session. So I stopped out the runner, and then on Wednesday we're over here. So 9:45 is this stair step price. So I sell the open because again I'm still just looking for the same old thing, right? I'm still on Wednesday session. I'm looking for, here's the open. I sell the move back down under it because if we move back down under the open, it's this point of control that's being affirmed, right? The point of control of that all-time high structure. And so if that is going to be the case, then you know I want to give these sellers a chance here. That I stop out of that because obviously that didn't stick, but then you get a very nice clean setup of a stair step break here, and that was really just a back test of the regular trading hours low of the Monday session, and it was also a play just to get to like a day time frame play, just to get to the diva and the let's see, I think Deepak here. Let's see here, I forget. It's my background. Let's see. Is this the wrong day again? Yeah, wrong day. Here we go. Okay, so looking for the diva for a chop, chopped it up, out more just above the open. So the open is over here. And then I think we took another exit at the low of the day, or I forget. Either way. Okay, I stopped out one more profitable stop, and then I just walked it down for the rest. So that went really well. I'm still in that position, and I just walked it down to the stop to over the overnight high because, you know, I was just walking these stops down based off of these areas of sideways on the 15-minute time frame, or I was looking at regular trading hours only. 15-minute time frame breakdown, I'm just walking it down. So every single time we trade sideways, break down, trade sideways, break down, I'm just walking that stop down. And so we traded sideways here, broke down, and walked it over to the overnight low because at this point now we're like, you know, very far away from the entry already. That would be pretty much be like 100 points. And so I'm only trying to protect like 100 and something shares of IWM. So that was a very effective hedge. Even if I just get stopped out here right now, I'll probably roll those proceeds into put stuff. So again, just protected. So that is pretty much it. So if you're interested in you know, trading alongside a bunch of folks, lots of professional traders, check out our community. Links in the description below. If you are interested in the getting 2 novel trade ideas, swing trade ideas sent to you every single week, and we do live trades as well, just like in the chat room, except for swing trade focused. Check out the swing report. Links also in the description below. I'm looking to be more active now that the election is over, but obviously not looking to force anything. So that's pretty much it. Appreciate you guys tuning in. Thank you for sharing some of your time and energy with me. And if you got anything out of that video, we would very much appreciate it. Like, subscribe. It's free for you. Helps us out a lot. Otherwise, I hope you enjoy the rest of your weekend, and I hope to see y'all soon. Farewell.